Okay, today's Wednesday, September the 3rd. We have a little less than an hour to go for the close, and I want to take a quick peek at the emini trade that I set up last Friday. And originally, I had a 100 wide condor here. Butterfly. 62.50 was the farthest out of the money strike. These are all puts, by the way. The center strike was 63.50, and then the strike that was closest to at the money price was is 64.50. So note that 100 and 100, classic butterfly, symmetrical of course, and this is basically two vertical spreads traded against each other. Now over the weekend, Sunday and Monday we were closed. So yesterday the minis were trading a bit lower than they are now. Take a quick look at this chart and we can see that yesterday's low at 8:30 a.m. Pacific time, by the way, was basically 64.30, and subsequently it rallied and it went out at 64.98. We did go a bit higher earlier today. Today's high happened at 7:30-ish a.m., so early, and the high, by the way, was 65.19. Trickled down. We've trickled down since then. Currently trading right at around 64.85. So this trade that I have, I wanted some downside coverage, so I put on, let me go here. All right. So I put on some downside coverage with this 100 wide butterfly. I paid $7.50 for it. So the trade cost me $375. It's $50 per handle, 50 times 7.5, $375. And when the market had its move to the downside, I decided to sell this condor inside the butterfly. Now the condor sale brought me a credit of 425, reducing my risk to 3.25. So 162.50 in risk now, as opposed to the original risk of 375. Let's take a look at the analysis tab of this and see how I stand. And since all the components are still there, this is going to be accurate. The expiration on this, I still have 20, how many days do I have left? 22 days on this. And again, my risk outside of the profit tent is 162.50 as opposed to 375. Now, let me go to the apex of this. So at the apex, and this is at expiration, if I don't make any other adjustments to this trade, it will collect a little less or a little more than $2,300. And outside of the, let's call it the butterfly zone, as long as I'm still somewhere in the profit tent, I collect a little less than $1,100. And again, to either side outside of the boundaries of the profit tent, my max loss is going to be 162.50. I do still like this position. I'm not going to get out. I can get out at this point, and if I wanted to, which I don't, and still make a small profit of I can sell this for roughly, let's say 4.5. And I originally paid 7.5 for it. And so the 4.5 plus the credit I received from selling the condor of 425 is going to give me a profit of roughly 875 on a cost of 750. But as I mentioned, I want to hold this trade a while longer. We have an employment report, the job situation, or whatever they're calling it now, coming out this Friday, and I want to see how the market reacts to that number. I do like that there was a bit of a, I'm not going to call it a technical failure here, but a little bit of exhaustion, let's say, on this move, this rally from the low of yesterday morning to this morning's high. So we'll see how this trade pans out. For the time being, I still want to keep it. I like the possibility as far as it closing within the profit tent. But again, we have to see how the market reacts to this Friday's number. And this is something of note. Bonds are on the stronger side today. They were looking pretty bad yesterday. Rates in the longer end of the curve have been heading higher, much to the dismay and chagrin and surprise of a number of traders, which to me is kind of weird because, well, everybody knows that short-term rates are heading lower. We're going to start, the Fed's going to begin a rate cutting cycle in a couple of weeks. Everyone knows that, but just because they're going to cut the lower end of the curve, it doesn't mean that the higher end of the curve is also going to go down. And there are plenty of reasons for the curve to steepen, even though we're going into a rate cutting cycle. I'm not going to say more about that now. Perhaps I'll make a video talking solely about that, but it shouldn't be a surprise. The curve can continue to steepen from this point. And even from the point of yesterday's low in the bonds, again, we've had about a point rally in the 30-year. But one more time, just because the lower end of the curve is entering a rate cutting cycle, we're entering a rate cutting cycle, it doesn't mean that the 30 years or the longer end is going to participate, at least not to the same extent as the lower end. So that's something to keep in mind, and we'll see how bonds react to this Friday's number. Okay, that's it for now. I'll catch you guys next time.